Welcome back. Pulling retirement money. The Wall Street Journal this morning reporting that baby boomers' mandatory withdrawals from 401ks and IRAs start in full force this year. Joining us right now is UN Ambassador and the Brewer Group CEO, Jack Brewer. Ambassador Brewer, great to see you.
Good to be here.
Thank you so much for joining us. So, U.S. law requires anybody who is 70 and a half years old or older to begin taking money from your 401k and your IRA. The oldest baby boomers are crossing that threshold this month. What does this mean in terms of the shift in cash? Walk us through it.
Well, this is actually a law that got passed back in 1986. And, once you turn 70 and a half years old, it's mandatory that you take a withdrawal. And so what you're really going to see, obviously, is an influx in tax revenue, which is why the law was put in place anyway. But, really, seniors have three options. Do you reinvest the money? Do you spend it? Or do you gift it? That's really the only choices that you have. And so what you see across the board is with the increase in the market overall, it's really offsetting a lot of taxes for a number of seniors. So they're really not feeling the hit as bad. If you were to see a decline, I think you'd see a lot more seniors looking at different ways to allocate that money.
So you talked about three routes. Which way do you see people going? Is this, if people go out and spend it, that could be a really big impetus to the economy, economic growth, consumer spending. Do you see people doing that, or is it more people holding on to the money and keeping it in the market?
Well, they're putting it under their mattress in a 0% rate money market.
Or giving it to their kids.
Well, with rising healthcare costs in a different kind of healthcare position in our country, I think you're going to see a lot of seniors putting more money towards healthcare. Obviously, the life expectancy is changing. I think right now we're about 85 years old, and life expectancy back in '86, life expectancy was around 80 years old. So that's a big jump. So people are living longer. So obviously you have to allocate your funds in a different way. And so, there's not one way that a senior is going to approach this. I think some who are in better financial conditions will probably reinvest the money. But I tell you what market's really going to feel the pain, and that is the financial advisors, because you're going to see a dramatic decrease in fees. I think I saw a story. There's over $10 trillion in savings account, retirement savings account across the board in America. I mean, those are big numbers.
Well, you're talking about ETFs and index funds having changed the game for hedge fund managers and mutual fund managers. And the average individual gets it. They're saying, why am I paying this guy 20% when, in fact, an ETF did better than that, or an index fund? No
doubt. I own an investment advisory firm, and we've really reallocated a big portion of our portfolio into ETFs. And it's more cost effective for your clients. And so I think the market is really moving that way. You'll see advisory firms that are more service-minded will be the ones that collect the assets, because people don't want to just pay you to sit in a position. They want you to actually service them and earn money.
Are the baby boomers ready for this penalty to come if they don't withdraw their money?
Believe it or not, most don't even know about it.
That's what I was going to say. How do they find out? I mean,
you got to have a good financial advisor.
Real quick, how do you want to allocate money right now? When you see the economy where it is, when you see this market where it is, how would you be allocating money? Talk to those seniors who are forced to take the money out and they want to put it in the market.
Dividend yielding stocks, I think right now you see a robust economy in America. So stick with your blue chips, stick with your safe bets, and just continue to be smart and don't take too much risk.
All right, we will leave it there. Jack, always great to see you.